practice, and we have also introduced about research analyst profession, the certification, the SEBI guidelines and everything. Today also I will take few questions for practice which can be asked in the NISM Series 15 Research Analyst certification. But before that, I would like to give details on this certification once again. The name of this certification is NISM Series 15 Research Analyst. If you want to work as a research analyst in a broking company, or if you are interested in preparing the report of the company, you can go for this certification. And this is the mandatory as per the SEBI guidelines if you want to work in the field of research analyst. Now, there are 13 chapters in this certification. This examination is for 100 marks. The passing percentage is 60. There is a negative marking of 0.25%. This certification exam is for 2 hours. Okay. So let's see a few MCQs. The first one is, which of these financial instruments do not have a default risk? So the options are investment grade corporate bonds, equity shares, foreign currency bonds, high yield corporate bonds. Now, first of all, we should understand what is the meaning of default risk. As you can see in the explanation, credit risk, that is default risk, both the terminologies are same. This refers to the possibility that a particular bond issuer will not be able to make the expected interest rate payment and the principal payment. Okay, that means, say for example, if there is a company, ABC company, which has issued a bond, so that company is liable to pay a fixed rate of interest, like for example, say 9%. So this is called as a credit risk or a default risk if that company is not in a position to pay that interest amount. Okay, but in equity shares, when you purchase any equity, any shares, so the company is not liable to pay any kind of returns or any kind of interest to you. There is no guarantee as such. It is completely it depends on the performance. So the prices in NSE and BSE, so we can decide from there whether to sell or no. So the stock price can go down, the stock price can increase, but whereas in bond, you get a assurity that you will get a certain percentage as a fixed interest. So that is the meaning of the credit risk and the default risk. Okay, so the correct answer for this question is option 2, that is equity shares. Okay, so in equity shares, there is no liability that the issuer has to pay any fixed return or a interest payment. Let's see the second question. Rahul invests 75,000 at a rate of 6% per annum. Calculate the future value of his investments after 10 years. Now see, for example, if you are investing in a bank FD, say 75,000 rupees, and the bank is offering you a rate of interest as 6%. And if it is for 1 year, you can calculate that for 75,000, 6% will be 4,500 rupees. But it will be little difficult for you to calculate it for 5 years, 8 years, 10 years, 15 years, correct? So what you can do is, there is a formula to calculate the future value of the investment. Okay, so what is the formula? Let's see. The formula is future value is equal to present value in the bracket 1 plus r raised to power n. Okay, so FV is future value, PV is the present value, R is the rate of interest, and N is the number of years client is giving to the for the investment. Okay, so now what we have to do is, now you know that the present value is how much? 75,000. So after 10 years, how much amount the client will receive at the rate of say 6% interest per annum? That we will have to calculate. Okay, so we will insert all the values given in the question. So FV that we have to calculate. So present value is 75,000. So we will put that. Then in the bracket 1 plus 6%. So 6% can also be expressed as 0.06. Okay. So add 1 plus 0.06 and power to 10. So we have to use the scientific calculator. So on the scientific calculator, there is one button that you have to press. You can see in the explanation what is that button. Okay, x power y. So when you press this, you get the answer, that is 1.79. So when you multiply 75,000 by 1.79, you get 1,34,250. So Rahul will receive how much? 1,34,250 at the rate of 6% per annum after 10 years. Okay. They can interchange the question. Like for example, they will give you uh, the future value, and they may ask you to calculate the present value. Okay, so using this the formula, we can easily find out the present value or the future value. Okay, let's see the third question. The work of research analyst can be hampered by option A, lots of unnecessary and irrelevant information. Option B, contradiction of data from multiple sources. Option C, inaccessibility of data. And option 4, all of the above. If you see, if there is lot of unnecessary and irrelevant information, the investor or the client or the trader will get confused. He will not be able to understand properly. So we should not provide unnecessary or excessive information. Okay, it will be a time consuming, and if the research report is lengthy, maybe the investor will not read the research report. So it should be necessary information and relevant information should be mentioned in the report. Second is contradiction of data from multiple sources. Now, when the research analyst is preparing the research report, he is using multiple resources, like he can get the information from the company website, or he can get the information from the credit rating agencies. So what is happening is, on from one source of information, uh, there is one point mentioned that the fundamentals of the company are good, so we can buy and hold this particular stock. But in the other source of information, it is mentioned that fundamentals are good, but currently there is lot of selling pressure due to the results are not so good. So because of this, temporarily the stock, we can see a profit booking in that, or maybe like people are selling stocks in that. So what is happening is, one source of information giving you one information, and another source of information is giving you another. So both are little opposite, you can say. So because of such information also, the investor or the trader may get confused. So we should avoid that. Inaccessibility of data, if the required data is not available anywhere. Okay, if the investor is reading the research report and the data that is looking for, it is not clearly mentioned in the research report, that can be discouraging. So the report can be hampered due to all the above reasons, that is the first, second and third, all the three options. So the answer for this question is all of the above. So these were the few MCQ questions for the practice. What we do is, basically we are providing coaching for the NISM various certifications. Like for this certification, research analyst certification, we will explain all the 13 chapters in detail. We will provide you the short notes, the reading material, the workbook, the latest workbook, everything. We also take a verbal test, and we will provide a lot of MCQs for practice, which will help you to achieve good score in the certification, and which can really impress the interviewer also. So the chances of you getting appointed by the interviewer will increase, because the interviewer knows that you have cleared this certification, you have passed the certification. So the chances of appointment is more. So you can really get a good job in the broking company or the research firm. So it's a very helpful profession, very helpful certification. So everyone who wants to work in a broking industry, they must have this certification. For further details, you can contact us on the details given in the description box. Our contact number, email ID, the website, all the details are given in the description box. You can leave a message or you can contact us back. Thank you so much for your time. Have a good day.